Hey, what's up, everybody? It is Tuesday, January 5th, election night in Georgia. So, who controls the Senate will be decided today, tonight. Betting odds show that Republicans will retain control, but it may only be by one seat. So, it's going to be a slim margin, but they will retain control, at least according to the betting odds. I don't know. I'll tell you this. Market reaction, and I'm going to say a couple of things about market reaction because there will be a market reaction to this election outcome. If the Republicans retain control, you will probably see a sell-off in gold, somewhat of a rally in the dollar, okay, because the perception will be, gridlock, no further spending, that sort of thing. If the Democrats gain control of the Senate, you will likely see a pretty sharp sell-off in the dollar and a pretty big rally in gold. Stocks will probably go up. Now, this is all just, that would be sort of like headline reaction played out in the markets. I mean, we've seen that before in so many different situations, so many different instances. Basically, nothing changes. Let me give you the breakdown. Right now, we have fiscal support to the economy at very high levels. We're about to see that expand significantly with the $900 billion COVID relief bill, all right? The numbers are going to start showing up. As a matter of fact, they already have started to show up. So that is positive, that is bullish, despite what may happen tonight, all right? Now, even if the Democrats win control of the Senate tonight, we don't know for sure what final policy is going to be. It's silly to speculate on this right now. They're saying another stimulus, the $2,000 checks are going to go out, all kinds of different things. We don't know until actual policy is proposed and passed and voted on and signed into law. But as it stands right now, the fiscal situation is such that, it's supportive. Nothing has changed. So, if we get a pullback from this, if the market is disappointed, if you get, what would be an emotional reaction, because that's what these things always end up being. People react immediately as if there's some immediate change in conditions. And there's not. So if you get a pullback on this, that's a great opportunity to buy in. And that's what I'm going to be looking for. All right, and there's a good chance we see a pullback if the Republicans retain control of the Senate. So you have that going on. But all of these primary trends that I've been talking about, lower dollar, higher equity prices, the inflation impulse, higher bond yields, higher gold prices and commodities and oil, all those things remain in effect. The only way those things are going to change, and I've said this a million times already, is if we see major fiscal policy change, major change on the fiscal policy, and that's not going to happen right away. I mean, Biden's got to be inaugurated. He's got to propose policy. It's got to pass Congress. And the beauty is, we'll know when we know if there's going to be a change. If there's not going to be a change, these trends are going to continue. If the change is such that it adds to the fiscal support that we're seeing right now, then the inflation impulse is going to get that much stronger. And you're really going to see big moves up in gold. You're going to see big moves down in the dollar. Right now, as I've been saying, the dollar trade, that's still like low-hanging fruit. I mean, that is a very controlled, steady decline. It's somewhat hesitant, like it goes down, it comes back up, it goes down. We didn't break, for example, the dollar index low of 2018 was 88.25. We're still in the 89 handle. All that stuff's going to happen. And the way it's going down now in this very kind of slow fashion, I mean, that's like a great opportunity for you. You know, you still get rallies to sell in the dollar. It's not like it's caving in and going straight down and you can't get on board. I mean, now you can get on board, you know, at very low risk, which is great. I love this kind of stuff. It's like the same thing that we saw in the stock market last year when it was kind of creeping up and coming back and creeping up, and not last year, sorry, 2019, and nobody believed in it, you know, that whole entire year. And I kept saying, you got to buy it, you got to buy the dip, you got to buy every dip. We still had the trade war situation going on. You know, we had the inverted yield curve. You know, we had the Fed doing, adding liquidity every day, doing repos and asset purchases. I mean, so there was all kinds of stuff going on and everybody was freaking out. And I said, look, you got to keep buying it. Don't get distracted by all that headline stuff. You got very strong fiscal. So everything was positive. I mean, it's like that with the dollar right now on the downside. It has not really taken a nosedive. I mean, it's been a very controlled, and part of that has to do with Fed monetary policy, which is basically has been supportive of the dollar. You know, low interest rate, zero interest rate, asset purchases. That's essentially deflationary. So, you know, that's opposing or offsetting some of the inflationary effect of fiscal policy. But the fiscal policy is winning out, and it's going to continue to win out unless we see a change. And we're not going to see a change. And I'll say this again, my prediction, I'm on record. I mean, the first year of Biden's term, we don't see any change at all. In fact, we may even see an addition to the current fiscal situation. And then maybe in 2022, as we come to the lead up of the midterm elections, then we might see, you know, a move towards or desire to, you know, get back on track with some fiscal consolidation. We'll see. We don't have to worry about that right now. It's not happening. So that's the outlook. I made a podcast today. I'll put it up there tomorrow. Got to edit it. And don't forget, go to my website, pitbulleconomics.com. I still have the 30-day free trial. I decided to keep that going for now. I may eliminate it, but take advantage of that while you still can. pitbulleconomics.com. Sign up for MMT Trader. See you tomorrow. Bye-bye.